Hi friends, this is Kishore. Welcome back to my channel. Today I'm going to talk about the housing market metrics that are released in the morning. This is not a financial advice. This is just for an entertainment purpose only. Let's jump into the show. So in the first slide, I put like what are the metrics released, like FHFA housing price index, S&P shiller home price index, consumer confidence, and new home sales. So first look into that S&P shiller home price index. So what is Shiller home price index? It compares the prices, single family homes prices change from month on month and tells if the prices increase or decrease. It tells from a month on month the price is increased by 0.2%. How about year over year? So that is also up by 0.4%. So by looking at this month on month and year over year charts, I got a doubt, is the new housing bull market is starting or is it just a rise of a sinking ship? Then I looked into further few more charts. The first one is existing home sales. How the existing home sales compared to Jan to Feb. It went up. It shoot up from 4,000 to 4550. And then I looked into the exist new home sales. Then new home sales are fell from 648 to 623. Then I got it out why existing home sales are up and why new home sales are down. I looked into the mortgage, 30-year mortgage rate. Interest rate. This is down from Jan to mid of March, like almost from 7 to 6.3. That might be the reason why existing home sales are up. Then I looked into the new home sales, how they are doing in the March. From Feb, it shoot up a lot to the March. So is the builders confident on the coming months? It is going to be continued the new home sales. Then I looked into this building permits and housing stats, they are down, they are not compared to Feb, they are down, and also construction spending, it is also down. So this tells builders are not confident enough in the coming months the sales. To make sure that, I looked at that lumber chart, price chart. In the lumber, the price chart tells it is going just sideways, there is no demand for the lumber. Then I looked into that money supply percentage charge, because to buy a home, money need to be pumped into the economy, like money liquidity need to be there. So, but the percentage of change of money supply, it fell from a cliff. Maybe the bank lending rules are tightened for the new loans. That's maybe the reason. Then I looked into this one, National Association of Home Builders House Market Index. This tells the rate of relative level of current and future single family home sales. If it is below 50 means it's a negative to the market. If it is above 50 means favorable to the housing market. Right now it is 45. And this one is consumer sentiment. The consumer sentiment tells how the consumer's feeling. The consumer right now sentiment increased 2.4% month on month, 2.6% on year over year. Why it is so low? So consumers right now feeling that inflation will continue and also a lot of uncertainty in the market. Then I looked into the consumer confidence. This tells about how the business conditions and labor market going to be. And it hit 9 month low. So consumers are not confident enough in the coming months about the labor conditions and the business conditions. And finally, I looked into this FHFA, that's the one today morning release. It is up 0.5% in February and 4% from last year. And they clearly mentioned the rise is because of the mortgage loan rate decreased from 7 to 6.5 and also low volume of supply. So after looking at all these things, is builders, if builders are not confident enough, or consumers are not confident enough, or the investors are not confident enough on the real estate market, or are they expecting any credit crunch? Then I looked into this chart. This tells about credit default spreads. So like 5-year credit default spreads are parabolic move, means when there is a credit crunch or credit issues or housing market issues there, they'll buy an insurance. So this is the insurance kind of thing. So it went up like from 2022 to from the beginning of the 2022, it would shoot up like anything. And then the last chart, this tells like if investors are not investing in the real estate or in the stock market, because stock market also not rising that much, where they're putting the money? They're putting the money in the money market funds. It is giving 4 to 4.5% interest rate. So what are those like? treasury, these are all like treasury inflation protected securities. So this is where the money is going. This tells a big story. Maybe I'll share that in another video. For this today, this is all. If you like the video, please hit the like button. If any of your friends looking for the similar content, then please share this video. Please watch other videos in my channel, and if you like them, please subscribe and click on bell icon so that you'll get a notification whenever I upload a new video. Till new, thank you so much. Bye bye.